They called it the soft landing. They said the crisis was contained. They said inflation was under control. But in 2025, the world economy began to fracture. Not with an explosion, but with a quiet collapse. The kind that starts in whispers and ends in chaos. They said it was just noise. But behind every collapse, there's always a cover-up. As Finny says, behind every chart, there's always a story. Let's rewind. It's 2023. Inflation is easing, markets are recovering, and central banks are congratulating themselves, like students who just passed the exam they graded themselves. But beneath the applause, a problem was festering. To kill inflation, governments had printed and borrowed more than ever before. And instead of slowing down, global debt crossed $315 trillion. That's 315, followed by 12 zeros. For every dollar of global income, there were more than $3 of debt. So while Wall Street celebrated disinflation, the foundation beneath was quietly cracking. By early 2025, the cracks became tremors. Bond markets began rejecting long-term debt. Developing currencies lost stability, and ordinary people, retirees, savers, small business owners, began feeling something strange. They weren't getting richer. They were getting squeezed. Finny had warned of this before. As he said, this wasn't an accident, it was a setup. When money gets too cheap for too long, it doesn't just disappear. It hides in inflated assets, shadow banking, and in safe investments that turn deadly when rates rise. And that's where the exposé begins. By mid-2025, every major economy reported resilient growth. But that was a mirage. Behind the data, something darker was brewing. Global shipping was down 12%. Corporate bankruptcies were up 40%. And yet, governments were calm. Almost too calm. They'd learned a new trick. When you can't stop the recession, you redefine it. Instead of saying unemployment, they used participation adjustment. Instead of stagflation, they said price normalization. And when middle-class savings began collapsing, they called it financial repositioning. As Finny likes to put it, that's like calling a sinking ship a buoyancy realignment. In reality, real wages were down. Household debt was climbing again. And for the first time in 2 decades, retirement funds were losing value faster than they could recover. It wasn't a recession, it was a silent erosion. Every collapse starts the same way, with good intentions. Governments promise stimulus, corporations promise stability, central banks promise control. But as Finny warns, you can't print trust. By 2025, interest payments on government debt were devouring national budgets. The United States was spending more on debt interest than on national defense. In Europe, austerity returned under new labels, fiscal responsibility frameworks, and emerging markets, they were trapped, forced to borrow in rising dollars while their currencies weakened. As Finny Riley noted, they tell the world to tighten belts, but the rich just buy longer belts. This was the start of the spiral. Governments issued more debt to pay old debt. Central banks bought that debt to keep yields low, and investors pretended everything was fine. Until one day, it wasn't. That's when markets snapped. August 2025. A mid-sized nation defaults. Not a giant, but enough to ignite fear. Bond markets panic. Credit spreads widen. And within weeks, banks restrict withdrawals in several regions. Sound familiar? It should. Because every financial collapse, from 2008 to 1997 to 1929, begins with what experts call isolated events. But isolation is an illusion. One domino never falls alone. Then came the quiet crash. Not a stock market collapse. That would have been too visible. This time, it was the bond market. When the safe assets start breaking, that's when the smart money runs. And they did. Funds fled to gold, crypto, commodities, anywhere not bound to government promises. Meanwhile, ordinary investors were told to stay calm. They were told this is temporary. But Finny remembered what his mentor once told him. Every empire of lies eventually defaults. And 2025 was proving him right. When we talk about collapse, people imagine charts and tickers. But the real story isn't in the data, it's in the faces. A couple postpones retirement because their bond portfolio lost half its value. A small business closes after its loan resets at double interest. A graduate moves back home because her paycheck can't cover rent. This wasn't just numbers falling. It was dreams deflating. Yet, in the middle of all this, something else rose. Resilience. People started questioning the narrative. They learned to budget smarter, invest wiser, protect themselves from debt traps. That's the paradox of collapse. It destroys illusions, so truth can rebuild. The 2025 collapse wasn't the end. It was a correction, not just of markets, but of mindsets. We learned that infinite growth isn't sustainable, that safe assets aren't always safe, and that financial education is the new survival skill. The real exposé isn't about who failed, it's about who learned. As Finny always said, knowledge, not money, is the one asset no collapse can take away. So if you're listening to this, don't panic. Prepare. Build liquidity. Diversify intelligently. Stay skeptical, but stay curious. Because, as Finny always reminds us, not every acorn needs to be a forest. Some just need to survive the winter. This has been the 2025 Exposé, the collapse no one's ready for. Finny Chronicles signing off. If this opened your eyes, subscribe to Finny Chronicles for the truth behind the trends.